Namaste and a very Namaste and a very good evening to all the esteemed members, fellow chartered accountants, joining us today for another enriching session of Golden Charcha. I'm CA Rashi Sonthalia and I have the privilege of coordinating today's session. Golden Charcha has truly emerged as a golden initiative by EIRC of ICAI, bringing cutting-edge knowledge directly to our screens. This initiative reflects our commitment to continuous professional development and ensuring that every member of our fraternity stays equipped with the latest tools and techniques. Our topic for today is GST annual return, GSTR 9 and 9C for 24-25 financial year with amendments. And our special addressee for today is CA Mayank Kumar. Sorry, our special addressee for today is CA Shankar Agrawal. I would like to, sorry, am I audible? Hello,
Yes, you are audible.
Yes,
I'm,
yes,
I'm
ma'am, you're
audible.
audible,
So the
Rashi.
special addressee won't be joining us. We'll just continue with our session since the special addressee won't be joining us. So our speaker for today is CA Ishan Tulsyan. He is a fellow chartered accountant and a partner at R. Tulsyan and Company for 4 decades, and it is a 4-decade-old multinational chartered accountant firm with offices across India, USA, Oman, Qatar, Saudi Arabia, and UAE. With 15 years of experience in GST, international taxation, audit and assurance valuation, he leads the firm's GST advisory and litigation, valuation, and cross-border tax structuring verticals. His academic profile includes FCA, ACS, LLB, MSc, and BCom honors from St. Xavier's College. He's currently serving on the National Managing Committee for the Federation of Indian Export Organization and is also the co-chairman of Indirect Tax and GST Subcommittee for Bharat Chamber of Commerce, contributing to trade, industry, and policy. We welcome you, sir, and I would like to hand over the mic to you.
Thank you so much, Rashiji, for such a generous and lucid introduction. I'm quite generous and my heartfelt gratitude to EIRC, to Vishnu Tulsyanji, to the board council member of EIRC ICAI, to all the esteemed delegate and fellow chartered accountant members who have taken out time from their busy schedule on a weekday. Especially today being a Monday, to learn more, to upgrade ourselves, to understand the amendments of GSTR 99C annual return for 2024-25. So I will share the presentation now. Just a moment, please. Kindly please confirm, can the presentation be seen?
Yeah, the presentation is visible.
Okay, thank you for confirming that. Let me just make this full. Yes. Okay. So we have a time duration of 1 hour today from 5 to 6 p.m. So this is a vast topic. So we'll try to cover as much as possible, especially focusing and emphasizing on the parts which are amended. So let us understand the important slides here. Let us start to understand what is GSTR 9. Basically, GSTR 9 is a compilation, or you may say a consolidation of all the input tax credit which you have claimed in your GSTR 3B for financial year 2024-25 and for in financial year 25-26 up to 30th of November, right? So there are basically 19 GSTR 3Bs from starting from April 2024 to October 2025, as well as the total output tax liability and the outward supplies which we have reported in our GSTR 1 as well as paid in GSTR 3B across these 19 GSTR 1 and 3B returns, right, across 2024 and 25 related to transactions of 2024-25, right? Now, let us understand in brief on which people is this requirement of annual filing applicable. So, on almost 99% of the taxpayers, the filing the annual return GSTR 9 and 9C, they are applicable for financial year 2024-25, barring accepting few people. Now, those people are basically taxpayers opting the composition scheme. So they need to file GSTR 4 rather than GSTR 99C. Now, casual taxable person. Now, those people who, for example, exhibit in some other state and take a casual, taxable person registration there, they don't need to file the annual returns. Input service distributors, non-resident taxable persons, persons who are paying TDS under Section 51, persons collecting TCS under Section 52, like the government agencies, they're collecting tax under GST, TDS on GST under Section 51. And similarly, these people, they are not required to file the annual returns, right? Now, the turnover limits, let us understand the turnover limits. What are the turnover limits? Is the same as what had been provided in the earlier financial years, that if your annual aggregate turnover, it is limited to 2 crores in your financial year 2024-25. It is optional for you to file your GSTR 9, which is the annual return. Now, if you have your annual aggregate turnover from between 2 crores to 5 crores in financial year 24-25, then you are mandatorily required to file GSTR 9, which is the annual return, and GSTR 9C is optional, which is the reconciliation statement. Now, if your annual aggregate turnover is more than 5 crores in your financial year 24-25, then both GST and 99C, they are mandatory, annual return as well as reconciliation statement. Let us understand what is the definition of this annual aggregate turnover, AATO. So it just does not include taxable turnover or domestic turnover. No, it also includes exempt supplies. It also includes zero-rated supplies with payment of IGST or without payment of IGST. It also includes transactions between two different GSTNs. Like, for example, if my company is R. Tulsyan and Company, I'm registered in West Bengal, also in Odisha. And for example, if I had, some goods, some jute products to be sent from West Bengal to Odisha, I'm selling it there. So those two are under my same PAN, right? But they are distinct persons. Right, they're distinct persons under Section 25 in your GST Act. So there also, since it is registered, both the GSTs, they are across two different states. So you need to take two different GST registrations, right? So in that particular case, you any supplies which you're making interstate, right, between branches registered across two different states, you need to record that turnover as well, right? So you need to see now this particular threshold of 2 crores and 5 crores annual aggregate turnover, it needs to be seen the pan wise, right? Now, as I mentioned, if I have turnover, for example, 1 crore 50 lakh rupees in my West Bengal GSTN, and I have, say, for example, 65 lakhs of turnover in my annual aggregate turnover in my Odisha GSTN. So together that comes to 2 crores 15 lakhs, right? So that exceeds 2 crores. So I need to file GSTR 9 for both my West Bengal GSTN as well as my Odisha GSTN. So the annual aggregate turnover, the threshold needs to be computed PAN wise rather than GSTN wise. Okay, so this is also an important slide I've put up for you. If you were to see that there are two sections under which notices are received, Section 74 and 73, right? These are Section 74 are those cases where assessments are done or show cause notices are issued where there is fraud, willful misstatement, suppression, and all of that, right? And Section 73 are those cases where show cause notices or assessment adjudications are carried out where these are cases apart from fraud and willful misstatement and suppression and all of those. So, if you were to see currently for 2020-21, we can expect a show cause notice, right? That is 28th of August 2026. If you were to see for 2019-20, the date, the time limit to issue the show cause notice under Section 74, which is fraud cases, it's already passed. It is 30th of September 2025. So now we need to wait for show cause notices to be issued for the financial year 2021 and onwards, right? Within this time limit. Similarly, for Section 73, if you were to see, you can receive show cause notices for 22-23 and onwards. And the last date to receive show cause notice under Section 73 non-fraud cases, that is 30th of September 2026. So, can we say safely that we cannot receive any show cause notices or cannot be adjudicated or assessed under Section 73 for financial years up to 2021-22 now in today's time, because those are all time barred. Similarly, for 74, it is up to 2019-20 that the assessments are time barred. So these are important dates which we need to understand. See, GSTR 9 is again an annual return which we mentioned, and it is, it is divided in 6 parts and it has 19 tables. We are going to go through these tables individually, and we'll also mention which are mandatory tables, which are optional tables, which we'll go through. We will revise and go through the entire form, and we will focus on the amendments, right? And the FAQs which have been issued by the GSTN on the by the CBIC on the 16th of October 2025. There are several cases which are mentioned in the frequently asked questions. Those are quite important. I request you to kindly go through those, and we will cover many with practical case studies and walkthrough of cases in our presentation today. You can also go through the changes and the amendments which have been notified in your notification 13 2025 in Central Tax, which was dated 17th of September. Those were the amendments which were mentioned and provided in your annual return and reconciliation statement applicable for financial year 24-25. You can go through those also. We've covered it in the presentation. See, these are some of the documents which you need to, just a moment. These are some of the documents which we need to which we need to compile before we go ahead, filing a GSTR 99C. Those are GSTR 3B, GSTR 1, are reconciliations of sales of input tax credit for financial year 24-25, our audited financial statements for 24-25, our GSTR 2B statements for the previous year, 23-24, and for the next year, 25-26, for spillover transactions that we are going to see. So these are, and last year's GSTR 99C. We need to keep all of these handy with us. I've also mentioned these. You can go through this. Now, let us go through the form. This is table 4. Now, as I mentioned, table 4 and 5. These table 4 and 5, we will go through what these are. Let us revise and go through this. See, table 4 of GSTR 9, it auto-populates information from GSTR 1. I've also mentioned the source tables. If you were to see here, the source return and the source tables. These are from GSTR 1 auto-populated from table 5 to 7 for B2C supplies, from table 4A to 4C of GSTR 1 and 1A for B2B supplies. So you can go through these. These are auto-populated. Now, what is table 4? Table 4 mentions all those taxable outward supplies or tax payment on inward supplies subject to RCM, which we have reported in our GSTR 1 and GSTR 3B during our financial year 2024-25 pertaining to 24-25 transactions. What does that mean? That means that from April 2024 to March 2025, those 12 GSTR 1 returns, R1 returns, we have provided all the taxable outward supplies, means sales, taxable sales which we have reported, as well as the output tax liability which we have reported pertaining to 2024-25. Those will all be auto-populated from GSTR 1, those 12 GSTR 1s filed for 24-25, which has 24-25 transactions. Now, an exception is that we are going to also have the tax paid in respect to inward supplies received subject to RCM. So these are not sale for us. These are sale for the GTAs, sale for the other maybe lawyers, maybe security agencies, right? But we are subject to RCM. These are notified services under Section 9 subsection 3. These are mentioned in our notification 13/2017 Central Tax Rate, right? So these we are supposed to mention the tax paid, and these will come from table 3.1D of GSTR 3B of April 2024 to March 2025, right? So we need to mention all these tables. They are going to contain the taxable outward supplies and the output tax liability on the sales, as well as the tax paid under RCM on the inward supply subject to RCM. Right now, in table 4, you were to see B2C supplies are there. These are mentioned net of credit notes and debit notes and amendments. Here we have table 4B, which has the normal sales which are as per forward charge, right? These are normal sales which we are providing, on which tax has been paid, which has been reported in GSTR1, as I told you, in your 2024-25 12 GSTR ones. Similarly, you have export supplies which are on which IGST has been paid. We are going to mention here during 2024-25, right? In your GSTR1. Here we have deemed exports, we have supplies on SEZ, on payment of tax. We have certain unadjusted advances also on which invoices have not been issued. What does that mean? That means in the month of March 2025, I have received basically advances against my provisional supply of services, but I have not issued the invoices, I have not completed the services in 24-25 up to 31st of March. But I have collected 100%, for example, advance of 10 lakh rupees. So I need to pay tax of 18%, 1 lakh 80,000 rupees out of my pocket, right? I need to collect 11 lakh 80,000, right? Or if I collect 10 lakhs, I need to gross it up. 10 lakh divided by 1.18 into 18%. I need to pay tax on the advances which I have received against provision of supply of service. But since I have not issued the invoice in 24-25, so I need to, so that particular invoice will not be mentioned in your table 4B. The unadjusted advances amount and the tax paid on that will be mentioned here. This amount will come from table 11A of your GSTR1, right? Filed from April 24 to March 25. This is RCM, which I already mentioned, from table 3.1D of your GSTR3B, filed from April 24 to March 25. Now, if you were to see these e-commerce operator, see, these are deemed sellers. Now, for example, if I have a restaurant and I am selling through Zomato, so under section 9 subsection 5, the e-commerce operators, Zomatos, they are supposed to pay tax, but it is actually not their sale, it is the sale of the restaurant. But the e-commerce operator will report their particular tax amount and sale year, right? The tax paid, right? And the deemed sale as per them. So they are going to mention it here. Now, these are all mandatory columns. Now, again, the mandatory columns are credit notes, debit notes, and these amendments, upward amendments, downward amendments carried out in your GSTR 1 from April 24 to March 25. These are all separately to be reported. Only B2C supplies, outward supplies, we need to report net of credit note, debit note, and inward and amendment, upward and downward amendment. Rest, for all the B2B and credit notes and for all the other entries which are here on which tax has been paid, we need to report the credit notes, debit notes, and amendments separately. Now, if you were to see table 4N, it contains, what does it contain? It contains also the tax paid under RCM. So we cannot correctly say that this is the entire sale and the tax paid on outward supplies on which tax is to be paid, taxable outward supplies and output tax liability, which we have reported in GSTR 1 and paid in GSTR 3B from April 24 to March 25. We cannot say that because RCM tax is included in this, right? RCM tax of 4G and 4G1 is included, right? So we need to remove 4G1 and 4G from this particular 4N. We will see it later. Now, if you were to see, I've already mentioned table 4 includes transactions having tax implications. Table 5 does not have tax implications. This I've already mentioned and discussed. You can go through the flow chart. Here is table 5. As I mentioned, these are all those non-taxable supplies or the outward supplies which are reported in your GSTR 1 from April 2024 to March 25 pertaining to 24-25, but on which output tax liability is not paid. For example, your zero rated exports on which is done under LUT and bond, right? Your, for example, for your GTA, if your GTA is filing, right? So the GTA is not supposed to pay tax if he is opted to pay under reverse charge mechanism. So the recipient of the service shall pay tax under RCM, but he needs to report his sale, right? So he cannot report it in table 4 because it would be a non-taxable supply for him, right? So he needs to report it here in table 5C. Similarly, the restaurants, they need to report their sales here, supplies on which tax is paid by e-commerce operators. The supplier needs to report here. The restaurants need to report here because the tax has been paid by the e-commerce operator, but it is sale for them, on which tax has been paid by someone else. Exempted supply, nil rated. And see, these are all, you can say these are all mandatory fees except the nil rated column. It can be clubbed with the exempted column here, right? Now, exempted is also interest earned on fixed deposit, interest earned on your loan. But those are exempted, right, in your Notification 12 2017. Those can also be reported here. Sale of electricity. Those need to be reported here. Non-GST supply. These are all supplies on which are not treated as supply of service as well as supply of goods or services. And as mentioned in Schedule 3, we need to mention here. Now, credit notes and debit notes for these are optional tables. You can net it off and you can report it in the above columns. But your amendments, these columns are mandatory. Now, the important part is turnover. See, this is the total turnover. Total turnover means 4N plus 5M. What is 5N? 5M is all the cumulative outward supplies, which is not taxable, non-taxable, which have been reported when in GSTR 1 from April 24 to March 25. So that is all in table 5M. In 4N, what did we see? We had tax paid under RCM also 4N, which we need to reduce. That is 4G and 4G1. So let us reduce RCM tax under 4G and 4G1. So this comes 4N plus 5M and minus 4G and minus 4G1. So sales and output tax liability, I can safely say that these are the outward supplies which have been reported in your 12 months from April 24 to March 25 in your GSTR 1 and paid in GSTR 3B, right? And all the other sales or debit notes, credit notes, amendments which we have reported in from April 25 to November to 30th November 2025 pertaining to 24-25, they will not come in table 4 and 5. We know they shall come in table 10 and 11. They shall come in table 10 and 11. So table 10 shall contain all of those sales and outward supplies, taxable outward supplies and output tax liability which are pertaining to 24-25, but somehow we missed reporting it in GSTR 1 and 3B during the financial year 24-25. But we can report it up to 30th of November 2025. We are aware of that. So if we report any sales or debit notes or upward amendment of any sales pertaining to 24-25 in 25-26 from April 25 to October 25 GSTR 1 return filed up to 30th of November 2025, we shall report that in that incremental sale in table 10. If we report any credit note to reduce our output tax liability and outward supplies, we can report in table 11. This again pertains to 24-25, but we have reported it in any of the GSTR 1 returns of those 7 months from April 2025 to October 2025 filed up to 30th of November. So what can we safely say? Total turnover is now 5N. 5N, what did we say? See, sir, 5N was the net outward supplies taxable plus not taxable reported in 12 GSTR 1 and GSTR 3B during 24-25 for 24-25. Now plus table 10 minus table 11. As we mentioned, table 10 are all those outward supplies and output tax liability, debit notes, upward amendments pertaining to 24-25 reported in 7 GSTR 1 and paid in 7 GSTR 3B of 25-26 pertaining to 24-25. Similarly for credit notes. So this I can safely say this total turnover is my GST turnover. Table 5N during the financial year 24-25 plus table 10, that is sale reported in 25-26 up to 30th November, minus table 11, which is credit notes reported to reduce our sales and reduce our output tax liability reported in 25-26 for 24-25 up to 30th November. So this is a very important figure which we need to understand. See, out here we need to this I provided in a proper flow chart. You see tax paid in GSTR 3B till March 25, right? That is table 4. Tax paid in 3B till November 25. This is not tax, this is outward supplies, right? And tax both. That comes in table 10 and 11, which we just mentioned up to 30th November. Now, for instance, if we have not reported any sales or not paid output tax liability pertaining to any sale transaction for 24-25, even up to 30th of November 2025. So what are we supposed to do? We are supposed to add that missed sale or missed debit note or missed upward amendment of sale of 24-25 in table 4 of GSTR 9. We are supposed to provide that in table 4 here, 4B. If we have even missed reporting it in 19 GSTR 1 or GSTR 3B from April 24 to October 25. If you have missed it, still you can make payment by reporting it in your GSTR 9 table 4. Kindly add that particular sale amount here, add the tax amount here, and what shall you do? You shall add the tax payable tax payable year, and here you shall receive a difference, that the total tax paid in your GSTR 3B in table 6.1 of GSTR 3B, that is table this is table 9 of GSTR 9. This records all the taxes paid on your RCM as well as on your output tax liability on your outward supplies, which we have reported in table 4, right? Which we have reported in our GSTR 1 and 3B from your April 2025 to April 2024 to March 2025. So it all gets auto-populated here from table 6.1 of GSTR 3B, right? But in case if you have not reported any sale up to 30th of November 2025 pertaining to 24-25, we can report it in table 4 and we can report it in table 9 here, and we can make the tax payment. There will be a difference in tax payable here, and we can make payment using DRC 03, and we can make the payment of interest also here. It's quite easy and understandable. So kindly do not report it in table 10. Table 10 sale debit note upward amendment is only to be reported if you have reported it in your GSTR 1 and 3B up to 30th of November 2025. But post that, you need to report it in table 4 and make the payment via DRC 03. Now, whatever amount of tax you have reported in table 10 or whatever amount of tax adjustment, downward adjustment, which you have reported in table 11 in credit note in 25-26 up to 30th November, you have already discharged that tax or taken that tax adjustment, right, in your GSTR 3B of April 2025 to October 2025, right, for 24-25. So you just need to report the tax payable in respect of all these transactions, sale transactions, which we have reported of 24-25 in 25-26, and credit notes pertaining to 24-25 reported in 25-26. You need to report it in table 14. So you need to report it in payable year, and you've already paid it. You already paid it in GSTR 3B from April 25 to October 25, filed up to 30th November. So this needs to be the same. We need to type it manually. Now, we've already seen table 4 plus table 10 minus table 11. This is table 4 is taxable outward supplies reported during 24-25 in 24-25 GSTR 1 and 3B plus table 10 sales upward amendments and debit notes reported in 25-26 across 7 GSTR 1s or GSTR 9 up to 30th November minus credit notes similarly 24-25 and 25-26. This is final turnover. Taxes payable, we just saw this is column 2 of table 9 and 14, and taxes paid of table 9 and 14. Table 9 and 14, what did we just say? These are tax payment tables. So table 9 will capture only the tax amounts, tax payments and payable which we have reported in our table 4, which pertains to only those outward supplies and output tax liability paid during 24-25. But after 24-25 and 25-26, if any tax is paid in 3B, that needs to be reported in table 14. So table 9 plus table 14 shall show you the exact entire picture of tax paid in respect of your total GST turnover for 24-25 reported across 19 GSTR 1s and GSTR 3B from April 24 to October 25, right? And these need to be the same. These are validations. We've already discussed these. These are again validations. The liability should not be different. It should be the same. Table 4 plus table 10 minus table 11. This is as per your total GST turnover. Liability as per table 9 and 14, it should be the same. Otherwise, you will have to pay by DRC 03. There's a new table. See, as we are aware, table 17, we need to report mandatorily, right? What is table 17? It is HSN summary on your outward supplies. We need to report it mandatorily. So what do we need to do? We need to report HSN wise sales. So for that, the GST portal, they have started providing us with a breakup of table 12 of GSTR 1 and 1A. What do we remember? What does table 12 say? Table 12 of GSTR 1 and 1A, it mentions what do we provide HSN details. We provide HSN details of our outward supplies in all our GSTR 1 and 1A. So here, if you were to see, this is the table breakdown which we can download. If you go into the dashboard of your GSTR 9 for 2024-25, this is a new facility which is being provided. So if you were to see, these are what? These are HSN wise monthly details. So April, 3 different HSN. cumulative is mentioned. Again, May, June, like that. So month-wise HSN summary is mentioned. You need to just copy paste it, review it, copy paste it in your table 17. Same, one more report is provided, which is consolidated report, right? Of your GSTR, of your table 12 of your GSTR 1, of your across your entire financial year 2024-25. This is HSN wise consolidated data. So this is a breakup of table 12 and you need to report it in table 17, which is mandatory. Now this again is a validation. Table 17 will contain only the HSN of the outward supplies which are taxable, which have been reported during 24-25 in your 12 GSTR ones, and in your table 5, which is non-GST supplies, right? Or GST supplies on which tax has not been paid, or exempt supplies, right? You need to, HSN needs to be reported there, plus table 10, which are those supplies pertaining to 24-25 but reported in 25-26 up to 30th November, right? 25, and credit notes again for 24-25 reported in 25-26, but advances, RCM and non-GST supplies, you don't need to report HSNs here, right? So hello, सेशन में है तो आप इस बात में बात करते हैं. Okay, so spillover effects. Now, what does the amendment say? The amendment says that as per para 2A of your notification 13 2025, what does it say? It says that your table 4, 5, 6, 7, none of the tables can contain any data pertaining to the previous year 23-24. So 23-24 sales, debit notes, credit notes, which you have reported up to 30th November 2024 of 23-24, you can report that. That will automatically be filtered out, and table 4 will not contain, table 5 will not contain any of the sale, any of the outward supplies taxable or not taxable, or output tax liability in table 4 and 5. 6 and 7 is for input tax credit. Table 4 and 5 is for your outward supplies and output tax liability. So these shall not contain. So automatically in your table 4 and 5, all of that data will be removed. All of that data will be automatically removed here. This is your table 5. Table 5. So pertaining to 23-24, if you've reported any sales, or in your table here, in your GSTR 1, if you've reported any of your outward supplies pertaining to 23-24 up to 30th of November 2024, those sales pertaining to previous year, the spillover effect shall not be provided here. So there is a validation. So GST portal will automatically remove all of that. So table 4 and 5 and 6 and 7 will only and only contain your data for your current year 24-25, right? So this is very important for you to understand this. Let us see this particular example for spillover effects, which we just mentioned. Now, GSTR 3B, for instance, has 1,03,000 of your tax liability, means your tax paid, right? 23-24, table 10, it mentions 5,000, means for 23-24, the spillover effect of sale for 23-24, which has been reported in your GSTR 1 and 3B for 24-25, it is 5,000. And credit note of 23-24, it is 2,000, which is reported up to 30th November 2024. You can mention that, right? These are spillover effects of 23-24 reported in 24-25. So this is 3,000, net is 3,000. So let us see this first particular column. This 24-25 correctly shown. So what is the actual output liability? Actual sales for 24-25 is 1 lakh. But in table 4, as I mentioned, this 3,000, net 3,000 of sale of 23-24, will it be auto-populated in table 4? No, I just mentioned. This will be removed automatically. So 23-24 data of 3,000 net sale will not be reported in table 4, even though it is reported in your GSTR 1 and 3B of 24-25 up to 30th November. So table 9, which is your tax payable, it will have only 1 lakh, because it pulls data from the output tax outward supplies reported in table 4. So table 4 will only contain the actual sales which are pertaining to 24-25 only, which have been reported, right? So it is 1 lakh rupees table, but 9 of paid will contain 1,03,000, because 3,000 you already paid. Table 9 paid from column 3 to 7. This will contain tax paid pertaining to 23-24 also, which is paid in 24-25, because this data from table 3 to 7 of table 9 of GSTR 9 of 24-25, it is taken from It is pulled from table 6.1 of GSTR 3B, which only mentions the actual tax paid in your GSTR 3B from April 2024 to March 2025. So 23-24 spillover tax paid will come, right? But tax payable shall not come. So as I mentioned here, your tax paid will be 1,03,000, but tax payable is 1 lakh. So no problem. 3,000 is absolutely reconciled. Let us see the other column. Now, 2024-25 short shown in 3B, corrected next year. So 1,08,000 is the actual tax liability for 24-25, but only 1 lakh has been reported up to March 2025 in GSTR 1. No problem. I have reported the remaining 8,000 rupees sale with payment of interest in my GSTR 1 and 3B up to 30th November 2025. So what's the problem? So 8,000 will be reported in table 10, right? And 1 lakh will be reported here in table 4, right? So table 10, it will be reported 8,000 rupees here. So here, your table 14, 8,000 tax will be paid. No problem. Now for 2024-25, the correct tax liability was 1,08,000. In table what, but I have not made the payment of 8,000 rupees this up to 30th November 2025. I've forgotten. What did I just mention? Add that remaining 8,000 in your table 4 and make the payment by DRC03 in your annual return. So 1 lakh was reported up to 30th of up to 31st March 2025. In 24-25, 8,000 I've added now because I have not reported it up to 30th November. So I shall pay 8,000 using DRC03, right? So you can go through the remaining columns here also. So these are the spillover effects. So 23-24 data will not come in 24-25. These I've already mentioned. Okay, now if I need to make payment of any incremental tax or short payment of tax or excess of claiming of ITC reversal, can I make the payment using my input tax credit ledger, electronic credit ledger? Yes, I can do so. I don't need to mandatorily pay by only cash ledger because you can take the reliance of the circular number 172/04/2022, which mentions that in case of self-assessment while you are filing GSTR 3B or in any proceedings, right? Even if you are issued a particular demand order or appeal order, you can discharge the tax liability using your electronic credit ledger apart from RCM and interest and penalty. So for your 9 and 9C, you can use ITC ledger. Not a problem with that. Okay. Okay. These are GSTR 9C. So GSTR 9C, there are 5 parts and there are 16 tables. Now, the total liability, the total turnover, which we saw, right, which was table 4 plus table 5 minus RCM plus 10 minus 11, it needs to be reported in table 5Q. And you need to report your taxable turnover from your audited books of accounts, not taxable gross turnover, from your audited books of accounts for that particular GSTN, not from the PAN base, only of the West Bengal GSTN, not a Odisha GSTN. So you need to report your audited turnover here and you need to report your GST turnover here and then reconcile further. I've also mentioned provided which are the optional or mandatory tables. Now let us go, these are certain validations you can go through. Let us see the input tax credit. Now this is very important for us to understand input tax credit. Now we are aware that input tax credit, what is the mechanism of claiming input tax credit? See, whatever your supplier is uploading his sale invoices in GSTR, that is going to your GSTR 2B if the supplier is filing his GSTR 1 up to the 11th of the next month. Those particular sale invoices are becoming your purchase invoices and being auto-populated in your GSTR 2B, which is generated on 14th of the next month. Now, from your GSTR 2B, those particular, all your GSTR 2B, your input is auto-populated in your table 4A in your GSTR 3B, right? So, in your table 4A, this import of goods, your RCM means those particular inward supplies on which you are to pay tax under RCM from registered your suppliers. Those will be available in your GSTR 2B. Those will be auto-populated in your GSTR 3B. And your all other ITC table 4A5. So this will all be auto-populated. If it is in your GSTR 2A, it is auto-populated in table 4A, right? So 4A contains your all other ITC 4A5, right? So can we say that table 4A5 it is auto-populated from your GSTR 2B? Then in case if we have any temporary reversal or permanent reversal, I'm sure you would be aware of these concepts. Permanent reversal are those reversals which are basically block credits if we purchase a car, repair car, or if we have to reverse common credit under Rule 42, 43, or if it is an ineligible credit, we need to report it in table 4B1. So it will be that input, ineligible input will be auto populated from 2B to 4A5 in your GSTR 3B, but you cannot reduce it from table 4A5 manually. You have to reduce it by reporting it in table 4B1, your permanent reversal, and temporary reversal in 4B2. What is temporary reversal? Let us see this. Permanent reversal, as I mentioned, block credit or your maybe under 42, 43, right? Temporary, what is temporary? There are two different categories. One is that Rule 37. What is Rule 37 say? If you've not made payment to your supplier within 180 days from the date of your invoice of value of supply and GST. So in that case, you need to reverse that particular input which you've claimed earlier in your GSTR 3B right after your 180 days expiry, and you can reclaim it later once you make the payment to the supplier of your value of supply and GST without any time barring. So that you can even claim after 30th November. It is not time barred under section 16 subsection 4. This is as per section 41 subsection 2, right? And the other temporary reversal is 37A. What does that mean? Means that if your supplier has not filed his GSTR 3B up to the 30th of September of the next year, right, of 2024-25 up to 30th September 2025. So you need to reverse temporarily that input, in your GSTR 3B return up to 30th of November 2025, and you can reclaim it later without any time limit once the supplier files his GSTR 3B. And there are other cases also. These two are separately clubbed. I will explain why. These two are separate. Now, goods not received. For example, if the goods were purchased on 30th of 31st of March 2025, but the goods were received on 2nd of April 2025. So in your GSTR 2B, your purchase invoice will appear in 24-25 in March. But if this is your March GSTR 3B, this particular purchase invoice will appear in table 4A5, but you can only claim it in April because section 16 subsection 2 clause B says that you can only claim input in the month your goods have been received. So you shall temporarily reverse in the month of March what the amount which is appearing in your 2B, which is, so you have claimed it in 4A5, but you're temporarily reversing in 4B2, right? And when shall you reclaim? Now assume this is your April GSTR 3B now. So you shall reclaim it in your table 4A5 by manually adding it in table 4A5 of your GSTR 3B of April 2025, and you shall report it in table 4D1, right? ITC reclaimed earlier temporarily, but ITC reversed earlier but reclaimed later. So what can we say? Table 4A5 now, it may also contain two types of credit. One is original credit, which is transferred from your GSTR 2B, auto-populated from 2B, and second is reclaimed credit which we have reclaimed due to temporary reversal in table 4B2, right? So there are two different types of temporary reversals. So claim in table 4A5, reversal in table 4B2, and reclaim in table 4A5 and disclose in table 4D1, right? That's the concept. We've explained all of these things. Now let us see what is the amendment. Now table 6A1, a new table has come, table 6A1, where they are mentioning that any input which you have, which has been originally appeared in your GSTR 2B of your 24-25 pertaining to 23-24, that we need to report separately because it is a part of your GSTR. It is a part of your table 6A. See, table 6A gets auto-populated from where? Table 6A gets auto-populated from table 4A. Table 4A of your GSTR 3B. 4A gets auto-populated from GSTR 2B. 2B gets auto-populated from GSTR 1 of your supplier. So what can I say? Table 6A of your GSTR 9, it contains input tax credit claim pertaining to 23-24 also, right? And it also contains reclaimed amount also of 23-24 if reclaimed in 24-25, right? So what is the government saying? They don't want any input tax credit pertaining to 23-24 in tables 6 and 7. So you have to remove that particular input tax credit claimed of 23-24 originally if it's appeared in your GSTR 2B of 24-25 originally first time, and you've claimed it first time in 24-25 up to 30th November, it will be a part of your table 4A, it will be a part of your table 6A, and it will be, so you have to remove that particular input tax credit spillover effect of 23-24 in your table 6A1. So this is removed. Now, secondly, what you need to do, if your in case what happens, I just give you an example of March 31st, you had the purchase invoice, but goods received in 24-25 in April, right? So 23-24, so March 2024, the purchase invoice was dated 31st March, but the goods I claimed the input tax credit in April 24. So what has happened, I have reversed that input tax credit of the goods which are not received in March 24. I've reversed it in 23-24 only. In March 2024 GSTR 3B, I have claimed it in table 4A5 auto-populated from 2B. I have reversed it in table 4B2 of March 2024, that temporary reversal for which the goods have not been received in March. But I have reclaimed that in April 2024 in 24-25, right? In table 4B1, 4B5, and I've reported in 4D1. So what will happen here? In your table 6A, your reclaim credit is provided here. Reclaim credit of 23-24 of that March, that particular goods received in 24-25. So I have originally claimed in 23-24 in March. I've reversed it in 23-24 March. But I have reclaimed it in 24-25 April because goods have been received. So that reclaimed amount, that also I am going to provided here in table 6A1. I am going to remove it from here because 6A2 shall only contain that input tax credit which is only pertaining to 24-25, not of 23-24. There is one more case. For instance, if in the year 23-24, due to I have claimed input in March 2020, for instance, in March 2024, I have claimed it in 4A5. I have reversed it in table 4B2. Why? Because I have not made the payment to my supplier, right? And 180 days, I have 180 days will cross in financial year 24-25. So in if I have, for instance, in 24-25, in 23-24, only itself, 180 days have passed. I have claimed it in table 4A5. Then 180 days passed in 23-24 only. I've temporarily reversed it in 4B2 in 23-24. But I reclaimed it. I made the payment to my supplier in 24-25 and I reclaimed it in 24-25. So that particular input which I have reclaimed pertaining to 23-24 because I made payment to my supplier in 24-25 after 180 days, no problem. That will also come in table 6A. So, but that will not appear in table 6A1 because as a thumb rule, what is the thumb rule? The thumb rule is if any ITC pertaining to 37 or 37A, if I have temporarily reversed in 23-24, but I have reclaimed it in 24-25, it will belong to the year where I have reclaimed it. So any ITC which I have reversed in respect of 37 and 37A, even pertaining to 23-24, but I have reclaimed it in 24-25, that particular ITC, it becomes of 24-25. Right? And any other ITC means goods have not been received or invoice has not been received or in any case mentioned in as per circular 170/02/2022 where it mentions temporary reversal due to not receipt of goods, not receipt of invoices, something, right? So in cases, if it is pertaining to 23-24 but reclaimed in 24-25, it will still belong to the original year 23-24. So in that particular case, we need to report the reclaimed amount in table 6A1. But 23-24 reclaimed amount is pertaining to rule 37 or 37A, 180 days, or the supplier has not filed his GSTR 3B up to 30th September of 24. In those cases, if I reclaim that input in 24-25, it belongs to 24-25 only, and I need to report that reclaimed input even though it is of the previous year in table 6H. Why? Because those reclaimed inputs of 23-24 pertaining to 37 and 37A, if reclaimed in 24-25, belongs to 24-25 only. So why should I exclude it and report it in table 6A1? I will report it in table 6H. This is very important. So now what happens? Table 6 here, table 6A2 will contain only that input tax credit which does not have the spillover effect of 23-24. But tell me one thing, this table 6A2 shall contain reclaimed amount also because table 6A is being auto-populated from table 4A. Table 4A5 has original input tax credit auto-populated from 2B plus input tax credit reclaimed also. of 24-25 claimed, reversed, and reclaimed in 24-25. It will the reclaimed amount by hand which we do, that will also be a part of table 45. So table 45 may contain two different types of input tax credit: original also of 24-25 and reclaimed also of 24-25. So what do we need to do? Table 482, it is table 682. It will contain reclaimed amount of your input tax credit claimed and reversed and reclaimed in 24-25 also. So that particular amount which we have reclaimed pertaining to 24-25 in 24-25, we need to report it in table 6H. Why? Because the original input which is auto populated from 6B, which is auto populated from your GSTR 2B and auto populated from table 4A5, original input, that needs to be reported in table 6B here. We need to report it in table 6B because that gets again auto populated in table 8B. 8B here. So original input of GSTR 2B pertaining to 24-25 transactions need to be reported in table 8B. So reclaimed amount cannot come in table 8B because, as I mentioned, reclaimed amount will come in table 6H, and only the original input which has been claimed in table 4A5 auto populated from table 2B, it will come in table 6B. So we need to report separately capital goods, input tax credit, report separately in capital goods, and we can club input and input services also, not a problem. RCM, again we need to bifurcate of inward supplies, RCM, input tax credit claimed from inward supplies received from unregistered persons and from registered persons. These are all mandatory, right? From import of goods, import of services, we need to mention. So now what is happening is, sir, this table 6A, okay, it had spillover effect of 23-24, claim and reclaimed, it has been removed from by reporting in 6A1. 6A2 has only the 24-25, only the 24-25 credit, 24-25 original credit from 2B plus reclaim credit in table 4A5 and 41. So reclaim credit we are reporting in table 6H, and original credit of which is auto populating from 2B reporting in 6B. 6B, this all other ITC. This 6B means all that input tax credit which we have reported in table 4A5 from GSTR 2B, original credit for 24-25. That will be auto populated in table 8B. Now, what is 8A? Let us see, they have also revised 8A. They used to say it is table 2B, GSTR 2B. Now, table 8A has become very nice. See, let's see what is table 8A. 8A does not have any input tax credit pertaining to 23-24. Okay, they have removed it from table GSTR 2B. Okay, of 24-25. They have removed all the spillover effects of 23-24 input, right? What does table 8A have? It has GSTR 2B pertaining to all the 24-25 related input tax credits, purchase transactions, which are appearing in GSTR 2B of 24-25 from April 24 to March 25, and your spillover effects also of your purchase transactions of your input tax credit which is appearing in your GSTR 2B of 25-26 from April 25 to October 25 up to 30th of November. So basically what is happening is table 8A contains your 19 months GSTR 2B pertaining to 24-25 transactions. So table 8A contains 19 months of GSTR 2A, GSTR, sorry, 2B transactions pertaining to 24-25. And what did I say? GSTR and your table 6B contains 12 months. GSTR 8B is auto-populated from table 8B is auto-populated from table 6B. So table 6B contains 12 months of your input tax credit, which is auto-populated from your table from your GSTR 2B, which is the original credit pertaining to 24-25. So original credit of 2B pertaining to 24-25, it is auto-populated in table 8B. So 12 months is here. On the top is 19 months. So 7 months. 7 months of GSTR 3B, which I have claimed of 24-25 input tax credit in where? From April 25 to October 25 up to 30th November. That I need to report in table 8C. So what happens is table 8A should be greater than or equal to 8B plus 8C because 8B contains original original input tax credit. What? From auto-populated from 2B, right? And this contains original credit which is appearing in GSTR 2B of 25-26 but pertaining to 24-25. These two, both, they do not have any reclaimed transactions, reclaimed input tax credit, because table 8A GSTR 2B, which is 19 GSTR 2B of 24-25 transactions, purchase transactions, they do not contain any reclaimed inputs, right? So what am I saying? That this difference should be zero or positive. Okay, it should not be negative. If it's negative, this means you have overclaimed your input tax credit, or you have not followed circular 170/02/2022 of claiming GST ITC as per your that particular notification. Let us see few examples. Example 1. What is that? ITC pertaining to financial year 23-24, claimed and reversed in 23-24 and reclaimed in 24-25 will be reported in table 6A1, which we mentioned, for reasons apart from rule 37 and 37A, because these are spillover effects and they need to be reported in table 6A1 to be removed, right? To be removed. So that 6A2 only contains input tax credit of 24-25. Now, let us see this. Just a moment. Yeah. Now, example 2. Here, ITC pertaining to 23-24 claimed for the first time in financial year 24-25 will be reported in table 6A1. That again is spillover effect, which I mentioned. First time or even reclaimed of 23-24 in 24-25 for reasons apart from rule 37 and 37A needs to be reported in table 6A1 to be excluded as spillover effect, right? Now ITC here, let us see another example. Here, ITC of the preceding year 23-24 reclaimed in current financial year due to 37 and 37A, which I mentioned. So if it is reclaimed in 24-25 for any reason which is pertaining to 37 means 180 days and 37A means supplier has not filed his GSTR 3B, but in the next year 24-25 we have reclaimed, so it belongs to 24-25. So I don't need to report and seclude it in 6A1. I need to report it in table 6H, which you can see ITC pertaining to 23-24 claimed and reversed in 23-24 due to not payment of vendor, as I mentioned, and reclaimed in 24-25 when payment is made. This becomes input of 24-25 only, even though it is of 23-24, because it is reclaimed in 24-25. So how do we report? How to report ITC of 24-25 claimed, reversed and reclaimed in financial year 24-25? Let us see this another example. This is of the same year 24-25 claimed, reversed and reclaimed. So what will happen? ITC claimed for the first time in 24-25 to be reported in 6B. For the first time it has come. Now it has been temporarily reversed in 24-25. So we need to report it in table 7H. And if we have reclaimed it in the same year, we need to report it in table 6H. So not a problem. We don't need to report it in 8C and table 13. So what is happening is in table 6B, one credit is posted. Table 6H, double credit is posted. Two credits. 120 rupees, 120 rupees, 240 rupees. And in table 7H, we are reversing 120 rupees. So in table 7J, originally, it is only coming 120 rupees, which is the correct amount because we are reversing also, na? Temporarily we are reversing. Now, let us see this example. How to report ITC of financial year 24-25 claimed, reversed and reclaimed in 24-25 due to rule 37 and 37A. What did I mention? That first time which is claimed, which is come in 2A, 2B and auto-populated in table 4A5, it comes in table 6A income and it needs to be reported in table 6B. So the first original credit will be reported in 6B. The reclaimed amount, extra amount will be reported in 6H. Double it is, na? But we need to mention, we need to do reversal one time. So this reversal will come in table 7A and 7A1. This will come in table 7A and 7A1. These are new tables which are added. These were not there last year. So if there is any reversal which is made in your 2024-25 GSTR 3B due to 180 days rule 37 and due to supplier not filing a GSTR 3B 37A, you need to report separately here. Otherwise, for block credit, you can mention the reversal in 17.5 here, and for other temporary reversals, which is the goods have not been received and it has been reversed temporarily, etc., you need to report it in 7H, right? So here, what are we seeing? That you need to report in table here due to 37A in the same year, original credit will be posted in table 6B. Here, since it's the reversal is due to Rule 37 and 37A, so the new tables we need to reverse it in 7A and 7A1, and we need to report the reclaimed amount in 6H because ये तो double है ना, this is double 6B 6H. These are double inputs, so we need to report it separately. So original input will only go in 6B, right, which goes again in 8B. Now, how to report ITC of financial year 24-25 claim for the first time in 25-26. This is for the next year. Now, for 24-25 to be reported, if we are reporting it for the first time, claiming it for the first time in 25-26, so we need to report it in table 8C and table 13. We are aware of this. If we are claiming any input tax credit for the first time because it has not appeared in our GSTR 2B, right? But in table 8A, this GSTR 2B, it will be showing because this GSTR 8A, this particular table 8A contains GSTR 2B, including 24-25 transactions reported in 25-26 2B also. So I am going to report the input which I have claimed for the first time, appearing in GSTR 2B for the first time in 25-26. I will report it here in 8C. As we mentioned, right? In 19 months of 2B of 24-25, 12 months of 2B of 24-25, and 7 months of 3B, right? Of 25-26. So we need to report it that like that. So we need to report it here, as I mentioned. Table 8C shall not contain a reclaimed amount. Obviously, it shall contain, because if you put a reclaimed amount in table 8C, so your 8A contains only the original GSTR 2B amount. Reclaimed amount is not there in 2B. And 6B, it comes into 8B, right? 8B also contains the amount which you have claimed in 4A5 originally, not the reclaimed amount. Reclaimed goes in 6H. And so 8C will also always contain the original amount, not the reclaimed amount. If you put the reclaimed amount in 8B and 8C, then your difference will be negative and you shall have to pay taxes. That will be incorrect, right? So there are few other tables also. In case if you have claimed IGST credit on import of goods in the next year pertaining to previous year 24-25, if you claimed in 25-26, so you have to report it separately. There's a new table. So you have paid the IGST of import of goods here, and you have claimed some amount in 24-25 itself here, and 25-26 you have to report here, right? So these you can go through. I think mostly we are done. I can just, these are few examples you can go through. I can share the presentation. RCM is also important. As I mentioned, RCM 4G, inward supplies, you need to report the taxes here, and you need to bifurcate the input tax credit between inward supplies received from registered person and unregistered person. So liability to pay as per 4G of your GSTR 9, and ITC should be in 6C and 6D. So the validation is that table 6C plus 6D, it should not be more than, obviously input cannot be more than the tax paid in 4G, right? Also, second validation is table 4G, which is there, which is the tax which we have paid. It needs to be at least more than the amount which is appearing in your GSTR 2B from your registered your suppliers subject to RCM, right? Table 4 of GSTR 2B. So tax paid should be more than the ITC reported in 2B. And your table 6D, which is your input tax credit claimed from inward supplies received from registered taxpayers, so that needs to be lesser than the input tax credit from registered taxpayers appearing in 2B. So you can go through this. This is your RCM statement. Here your table, your GSTR 3.1D tax paid, you have paid here, and you have claimed here. So it should not be negative. Whatever you have claimed, it should be lesser than what you have paid. So it should be either positive or zero. So you can go through that. These are few consequences. These are amendments that you do not need to now. For example, due date is 31st of December. If you filed your GSTR 9 on 10th of Jan, so you need to pay late fees of 10 days in GSTR 9. And if you filed your GSTR 9C on 12th of Jan, so you need to pay only late fees of 2 days, not of 12 days. So 10 days common, late of 9C, you do not need to pay in your 9C. These are few late fees, as we are aware. 25 rupees, 25 rupees for a turnover not exceeding 5 crores, limited to 0.02% of the state turnover. All of these things you can go through. This is a new table added in 9C for the 2 days of late payment of late filing of your late fees for your late filing of GST 9C. Okay, so and you can also not file returns after 3 years from the due date. So you can only file 9 and 9C, or you cannot file 9 and 9C before 2021. So the last date to file 9 and 9C, here you can see 22, 23, you can last file up to 31st of December 2026, because 3 days from the due, 3 years from the due date. After that, you cannot file. Now, this has been brought into effect on the GST portal from the 1st of November 2025. So you can go through these. These are certain validations which I have put in. If you have any questions, please do ask me. I have tried to cover as much as possible here in 1 hour, though it requires a long time because it's a long presentation, 9C validations, going through the forms. But I'm glad we were able to cover most of it. If you have any questions, please do ask me.
There's one question. Ravinder Seshan is asking to say which
Hello.
not mandatory.
Hello. I cannot hear you. Is there any question? Rashi ji, is there any question posted in the chat
There is
box?
one question. Am I audible now?
I cannot hear you, Rashi ji. I think the voice is not audible.
Am I audible now?
Yeah, yeah. Voice is very low, but it's a bit audible. Yeah.
So, there's one question they've asked, which of the tables
I
are
am.
not
It's not
mandatory?
audible, Rashi ji. It's very less audible. I cannot hear you. What you're saying.
Yes.
Can you increase your volume from your end, Rashi
Is
ji?
this better?
Yeah, yeah, yeah. I can hear you now. Yes, yes.
Yeah. So there's one question they've asked, which of the tables are non-mandatory?
Yes. So I'll just show you which of the tables are not mandatory. Just a moment.
And if there's any other questions, please, you can just type it in the chat box.
Okay, just a moment, please. I'll just show you. I've put in my presentation also. Just a moment. Yeah. So see, the tables which are not mandatory, I'll just show you. Here, if you were to see these. Now, in table 4 of your GSTR 9, all the tables are mandatory, sir. All the tables, your credit notes, debit notes included. Now, let's come to table 5 of GSTR 9. Now, there's one optional table, as I mentioned, nil rated. You can club it with the exempted column here, call a row. Then, credit note and debit notes for your supplies on which tax is not to be paid. Those are optional. They can be netted off with your above tables. Otherwise, they are all mandatory. Table 6. Now, let's come to table 6. Here, table 9 is auto-populated. It's mandatory. These tables are mandatory. 10, 11, 12, 13, all are mandatory. Let's come to table 14. It's mandatory. In case if table 10 and 11 you put in any value, table 14 triggers and it's mandatory. Let's come to the next table. Your table 17 is mandatory. So table 15, 16, they are not mandatory, and table 18 is not mandatory. So table 15 and 16, what does table 15 and 16 say? Table 15 says your refund, your other demands or anything like that, that's not mandatory. Table 16 says any composition, any purchases which you made from composition taxpayers, or if there is any outward supplies which you made under Rule 143, means you've sent the goods out for job work, but within 1 year it has not come back to you. So it's a deemed supply, right? Or in case of sale or approval basis for 6 months, you have sent goods but it's not come back. So you have to consider it as sale. So that particular your table 16 mentions these three particular events. That is optional. It's not mandatory. Table 17 is mandatory. We just mentioned this, for which a new table has also been provided. Table 12 means a breakup. Table 18 is not mandatory. Like the way it is HSN wise for outward supplies, for inward supplies, it's not mandatory. Now let's come to GSTR 9C. In GSTR 9C, if you were to see, table 1 to 4 is mandatory. Table 5, you need to report your outward supplies as per your audited books of accounts here, right? In 5A. But you can club all the reconciliations from 5B to 5N into 5O. Adjustments in turnover not listed above. So these are all optional. See, I mentioned here. But you need to, it's advised that you provide a reason for this breakup in your table 6. So table 5C, I mentioned here, O means all optional, M means mandatory, M means mandatory. Table 7, here, this is also all mandatory. Table 7C, it's all mandatory. Table 9 is mandatory. Table 9 is mandatory. Table 12, is mandatory of GSTR 9C, which mentions reconciliation of input tax credit as per audited books and the input claimed in GSTR 9 means appearing in GSTR 9. Table 12 is mandatory. Table 14 is not mandatory. So table 14, as I was to mention here, table 14 here, GSTR 9C, table 14. This is 12 is mandatory, 13 is reasons, 14 is not mandatory. So 14 is breakup of expenses. Basically, you need to provide the breakup of expenses. Those are not mandatory, right? Yeah. Is there any other question, Rashiji?
Not, there is one more question. Uh,
No, sir.
what is the,
HST for inward supply is not mandatory. That's table 18. That is not mandatory. For table 17, it's mandatory. Yeah. Yes, ma'am. Sorry. Yeah.
so I think it's time now we should wrap up the session.
Sure. Thank you, everyone, for a
So,
wonderful patient hearing, and thank you all for having me and having the patience to hear me throughout the presentation. Thank you all.
uh, as we conclude today's session, I would like to extend our sincere gratitude to CA Ishan Tulsyan for his valuable insights and expert guidance. His clear explanation, practical perspective, and thorough understanding of his subject has greatly enhanced our knowledge and clarified many complex aspects of compliance. We truly appreciate your time and effort for this dedicated, enriching session. Thank you, sir.
Thank you, ma'am. Thank you so much. Thank you all. I would share the presentation in case if you require it. I'll share with the EIRC, so you can talk to EIRC and get that. I've made a very exhaustive presentation with a lot of other slides which you can refer to. And in case if there's any query, you can get in touch with me. Thank you all. Have a good day ahead.